Hey, it's Mike with PriceActionTradingSystem.com, and it is Monday. It's December 12th. This will be our chart lesson for the day. And before we get started, I'm just going to kind of give you a heads up. I'm going to trade all this week. I'll probably take off. I'm gonna work this week. I may take off Friday, but Friday won't matter because we don't do a chart lesson on Fridays anyway. Um, I may take off, start my end of the year vacation on Friday. So at the very least, I may end up working Friday, but that's kind of irrelevant at this point because we don't do a chart lesson anyway. So just kind of giving you a heads up. I'll work through the 15th, maybe the 16th, and then I'll take off the rest of the year. Um, so no chart lessons, no mid morning charts for those last couple of weeks, and the trading will, you know, the market will slow down some anyway. Definitely probably won't be much happening that last week of the year. Christmas falls on a weekend this year on a Sunday, so I doubt there'll be much going on that Monday through Friday to the first of the year. That'll probably be the slowest part of the year. So the markets will still be open on most of those days. I'm not sure. I haven't looked at the trading calendar yet. So if you want to trade, that's fine. Just don't trade those half day holidays if there are any. Don't try to trade those because you'll just get yourself in trouble if you do. There's not much volume. The market closes at 12:15 usually. And again, I have not looked at the trading calendar, so I don't know exactly what the plan is, but or what days the market. But since the holidays are falling on a weekend, my guess is there will be some day during the week where they'll be closed in lieu of the actual holiday. So just be aware of that. Maybe they trade half days. I don't know. But that's generally how that works. But again, I'll work most of this week. I may take off this Friday, but otherwise I'll be here the rest of this week, and then I'm taking off, and I'm gonna be out of pocket for the most part. I will check my email from time to time for emergency situations, that kind of thing. But if you will, hold your trading questions and things like that, because I won't answer them. Um, and I prefer them not to build up, have 5,000 messages when I get back on the second or so. I'll probably be back to work the second or third, something like that. It looks like the first will be on um, a Sunday, so I'll probably be back to work that Monday the second, most likely. So anyway, that's kind of my plan. If something changes, I'll let you know. But just wanted to start kind of giving you a heads up so you're not taken by surprise when I disappear here the last couple of weeks of the year. But I do this every year. Most of you have been around or aware of it. And this year won't be any different. So it's just not worth really trading those last couple of weeks. Not much going on. I enjoy to take off. Most of your institutional places will be closed. Bankers, they're squaring up into year stuff. So the market can get a little squirrely anyway. People, uh, they'll be dumping their their bad their bad investments and picking up new ones to try to replace them and try and just square up the end of year stuff. So it's usually kind of slow anyway, and a lot of them are out for vacation, and so things will definitely slow down. But anyway, let's talk about today's chart while I'm on that. While I'm thinking about it, it was an odd rollover day. Usually your rollovers on a Thursday, and for whatever reason, December, I don't, maybe December's always rolled over um, at a different time. But rollover was kind of an odd time this month, and I don't know if I just was not paying attention, but I came in this morning, opened my chart, and I thought, what's going on? And I got to looking, and I thought, well, maybe did I miss rollover or something? And sure enough, it's rollover day. So I don't know if it was an odd time this time, or if they've changed it, or if it was because it was December, or if maybe I'm just so distracted by all my issues that I'm not paying attention. But usually it's on a Thursday, and so I'm not sure what's going on. But anyway, today you should have rolled over today, which I did. The chart I put up was a March chart for today when I opened up. And I got several emails and messages about people saying their volume was real low. Well, that's why, because for some reason the rollover was a little different this time. Um, I did notice later in the day that I had a message from NinjaTrader, but it was kind of hidden behind the chart, so I didn't notice it until I didn't notice their message. I don't know, maybe it popped up after the fact or something. I don't know, but I did get a message from NinjaTrader saying to roll over. But usually they give you a message a day or so in advance, so maybe they changed something. I just don't know. I hadn't looked into it that closely. Uh, I mean, it wouldn't have hurt you to trade the other chart. I'm sure there was probably sufficient volume, but you wouldn't have had as much volume, and you wouldn't have probably had all the setup. So, if you didn't notice it, you wondered why your volume was low. That's probably why, because everybody rolled over today. And it was pretty clear when you opened the two charts and compared them. So, anyway, this is still the December for the daily chart. I haven't changed over yet. I'll change it tonight or in the morning before I post it. They probably won't look much different, I don't think, but the prices will probably be a little different. But other than that, there's not much different. But you can see the day. Very bullish day today. We broke lower, failed, turned up, but we didn't. I don't know if we broke higher. Yeah, we did break higher, but we didn't close higher there. So this could just be a fake out before the CPI comes out in the morning at 7:30. And I noticed I did get a notice from my broker saying that they were raising margins over during the overnight and preparing for that. And you know how lately anything to do with the economy, especially inflation and things like that, they've been some humdinger news items. So be careful in the morning. I would be flat. I would wait till after that CPI before I tried to trade. So I'm probably going to come in at my excuse me, I'm sorry. I'm just about to get over this cough, but I hadn't quite shaken it. When I start talking a lot, um, I start having to fight this cough off again. So, but anyway, I'm probably going to come in about 7 o'clock because I want to just watch it and see what happens. But I'm going to be flat. I'm not going to dare try to be live during that because it could be a humdinger. And if we get some kind of surprise or something, we could rock it up or rock it down. I wouldn't be surprised if we rock it up and down both ways a couple of times before it figures out what it's going to do. But we'll see. So I don't know what to expect. I just know it'll probably be crazy. So I would be flat. You've been warned. Um, Wait till after that CPI news at 7:30, and then I think Wednesday the FOMC. I believe it's Wednesdays. Let me think about it. Pretty sure it's Wednesday, the FOMC announcement, so it'll be another news day Wednesday. So it's going to be a crazy week that no telling what could happen. So just be careful. Make sure you're aware of both of those news items. Always keep your news, some kind of news guard on your chart, and check it every morning. That way you know you don't get caught off guard. At the very least, just go to one of the Forex places that post the news and look at it each day. All we worry about is the red stuff for U.S. And some of the red stuff even doesn't really make much of a difference. But if it's red lately and it's U.S. news, I would pay strict attention to it if you're trading any of these indexes. So just be aware of that. Don't get caught off guard. But here's the daily chart. You can see we're still just kind of chopping sideways. It was another reversal day. We did close much higher than we've been closing. Maybe that means we're going to go back and test the upper side. Um, we'll just have to see. I don't know what to expect, and I imagine it's going to be driven by the news tomorrow morning, and then in the meantime, we may rally. This could just be people squaring up here, trying that been getting short, and says, okay, we're going to get flat until after the CPI and FOMC news because nobody really knows what to expect, and it could affect the market in different ways depending on what they come out with. So this just could be some squaring up today, or we could be going to bounce here. It's just hard to know. There's no real clues on here. This is just mostly sideways congestion again. It looks like we're back in the range, and we're very close to the midline, which could of this previous range, which could again create resistance. So just be very careful. Be aware of those news items, and be flat going into them, and just understand what the consequences of forgetting about that could be. It could wipe you out pretty quickly. So if you trade with your stops, you're always probably going to be okay. Never trade without a safety stop. Always put them where we teach you at the bottom of the swing you're trading, and that's the most you can lose. Even if there was something crazy that happened, and as long as you got a sell stop order in there, you're going to get filled at the market. So you might get a little slippage if it was something super crazy, but you won't lose much more than where your stop is at. And if you trade without a stop and something crazy happens, you could get wiped out in a blink. So never trade without a safety stop. You don't ever hear me mention that because that's part of our strategy and we don't do it. I never trade without a safety stop. It's always there. And if you attempt to do it, you're just playing with fire. I mean, you play with fire enough, eventually you're going to get burned. So trust me when I tell you, never trade without a safety stop. If you don't learn anything from here, don't trade without a safety stop. You learn that. So, okay, well, let's go over to the 2000 tick intraday chart, take a look at it. It's kind of an interesting day. There were a couple of ways to look at it. Earlier, most of the day you could have just traded it as a range. It didn't really break out and trend higher until going into the close. But you'll see that when we flip over. I mean, we trended slightly higher, but it still was range-like. But let's flip over there and you'll see what I'm talking about. And you can see the early range with the resistance here. It was very clear. And so once we broke out, just do your measured move, which is this blue line. That blue line is the equal distance from the width of this range. And you can see that was our target, and then that tended to hold until somewhere just prior to 2 o'clock, this thing started rallying and rallied on. But for the most part, you could have played the range. There is a weak channel here that's swinging both up and down, above and below the EMA. So you could trade this either way. Even if you just traded the range, that's okay as well. Personally, I think you were better off to trade the sideways range. So let's just say you remove this, and then you need to draw these shorter term micro channels in here and just play those up and down, assuming that we're in a range. And it didn't break out till here, and there's no trades on that anyway, and that took us into 230. So if you just, if you move this over, you can see we're just playing the range. And so that's pretty much how I looked at it. I saw this early, but I just wasn't confident in it. I ended up drawing it, and in the end, it didn't hold anyway. Prices just went higher. So it didn't matter how you saw it, in my opinion. You still had to trade these shorter micro channels. And with it swinging above and below the EMA consistently, even if you saw the channel, you still trade it that way. So anyway, let's just take that off. That's the way I looked at it for the most part. And 7 o'clock came right in here, and I just don't see anything. This one was tempting. But if you draw this shorter term channel down through here, that's your first break, and there's no new low. So I was a little leery of that one. It's a possibility. Maybe you trade that one. But then when you got the reversal here, I liked it. I don't think I would trade that on the engulfing bar. This actually broke lower. Let me zoom on in here. It broke lower, turned, and then went up. But it's such a bullish bar. If you wanted to go long above that, I wouldn't blame you for considering that trade. It's a really big bar. I mean, it's 17 ticks. I say it's a big bar. In the scheme of things over the last couple of years, that's not high volatility. It's higher than the normal bar. You like these 8 or 10 tick bars, 7 like that one. You prefer one like that. But occasionally you're going to get 10 to 20 ticks. It's going to be still a good setup, and maybe you take it. You just have to decide how much risk you want to take on. And so that might be the deciding factor. I made this one green because it's not a perfect reversal, but it is somewhat of a failure, and it is somewhat of a reversal. Turns out to be a pretty nice trade if you took it. There's even a hidden second entry right here, but this is an inside signal bar, so you can't take that, and then you just never really got another chance. This one was tempting if it had closed bearish, but it didn't. But then finally, notice you try to go higher once, twice, and you also got a new swing low, so first entry, second entry, plus it's a lower high here. I like that one a lot. It took it a minute to take off, It comes back again and gives you another chance. Now it gives you another failure to the long side uh, and another lower high with a very bearish bar. So if it breaks lower, we're probably hopefully headed to the other side here again. It doesn't quite get there, but just draw your little trend line, your trend channel down here like so. And you can see it working down there. And you get to close outside, new low, and it reverses. So I like that one just to ride it back to the EMA. I mean, this is played out for the most part. It's a little congested, so you got to think about that. Plus, you would expect prices might try to go down here, but you know, if you see how many times we try to go lower there, a market that can't go lower that suddenly reverses is probably going to go higher. The other problem with this is there's a gap there. Closed on its high, opened on its low, and kept going. So you probably had to be super fast on the trigger, and you may not have got in it without a limit order. And if I was going to use a limit order, I'd try to get a little better entry, and you wouldn't have got filled. So I doubt you get filled on that, but your chart might have set up a little different than mine, and if you wanted to take that trade, you could. We run up, you get a close outside, move to a new high, and once again, now you got a quadruple test there. I don't know how many tests. It's not the best signal bar, so I marked it green. But again, if you wanted to go short, notice the close outside, new high, plenty of room back to the EMA. You're not in a sideways market on a range. You're not really that worried about the EMA anyway. The midline would be more of a concern than the EMA. And we just end up kind of chopping sideways and we come back again. This was a very bearish bar. If it would have broke below that, I'd say go short. But it doesn't. And it doesn't break lower till over here, and then you just got congestion. So you can't go short there again. And you got to be careful getting long. There is a second entry long here, but you're in this range, so you're not too worried about second entries. And it's an inside bar. You don't want to go long into the resistance. There is a trap right there, so if it breaks higher, you probably could get a scalp. And you might have even got a runner on this, but I wouldn't risk it there. It's just most of the time that's going to trap you and fail, and you're going to end up with a loser. So just try to stay away from those. But if you wait a few minutes, you get a true second entry with a nice signal bar, and you get to close outside new high, and your target would probably be up here. If we keep going, you got to figure we're going a measured move. It drops down, and really all it does is now the range that was down here looks the same, except it's moved a little higher. So just play this side of the range and assume this is our target up here. And this is just all too congested, and again, too congested. I mean, there is a triple test here. You could call that a 1, 2, 3. Signal bars, I don't know if that closes in the upper third. You know, it's one you might say, okay, if your signal bar looks good enough, take it. Runs up, finally gets the measured move. You get a close outside. And the reason I like this one is because this is a double bottom, and it's a first entry, second entry, with a lot of people looking to probably fade off this measured move. And so it's probably going to trap them and at least run back and test the high, as long as you got room to get out before that. And I had a long conversation with a gentleman, and I don't know what he was looking at, but when I say you make sure you got room to scalp out, your entry is one tick above here. And so when I say that, all we're worried about is how far it is to that last high. So there has to be room in there, at least 6 ticks. And you can see right there, there's 2 points. So there's plenty of room to scalp out between here and that last high. And so when I say room to scalp out, that's what I'm talking about. So make sure I think we're on the same page now, but I had a hard time understanding what he was talking about, and I think we were maybe talking about 2 different things. But when I say room to scalp out, that's what I mean. And if you went short from here, then this is your signal bar. And the last swing was down here, so that would be your concern, room to scalp out here. And you can see you got 4 points, so you got plenty of room. Now here, you're still talking about this last swing down here. Yeah, you might look at that one, but on a range day, that's not as important either. It's more to the upside because we're playing the range here and there's resistance there. Now on a range, Now, if we'd been bouncing across there all along, yeah, you'd be more concerned about that. But after a failed breakout in the lower high, we're looking for prices to come back down here, or at least back down and test the last support area, which is here. So at the very least, you want to make sure there's room to get out between here and here. But generally, I would look at that one too. So, and you can see there's enough room there. So just don't get so hung up on some of these rules that you talk yourself out of every trade, but understand what we're talking about as well. So, but I like that short, trying to ride it all the way back, and maybe you ride it all the way back into the other range to the bottom. That's what your hope is on a failed breakout up here. And you get a pretty good move out of that. But you just draw your trend channel, you get a close, new low. Now look for the one going back. And here we are working back. There is a failure here, but that doesn't, you're not looking for a failure that close to the highs, so just there's no reversal or pattern that you want to trade right there. Comes up, gets a close outside, tries to go higher. There is a lower high, but I'd want to wait and see if you got something better. And I don't know why I didn't mark that. I just ran past it, I guess. But notice that you came back again and make another lower high with a very bearish bar. I like, as long as you got room there to those lows, take it. I mean, maybe it's questionable, it's a little close. I mean, you got plenty of room there, even to the closes. Well, maybe not to the closes, but to down here. Again, on this sideways stuff, you're just kind of looking where the last lows were. And so I like that trade. Maybe you only make it green. Maybe that's what I was considering and didn't mark it. And then it just turns and goes higher. But you can't go long into all that resistance, and you never really get a failure or reversal set up, and then that takes you into 230. So it's kind of an interesting day. Again, I think you just play the range. But again, if you played this, that was fine. You can see it's valid until right here, and then it just takes off on a new trend. So that's valid. But see how it keeps bouncing at the midline. It got below it a couple times, but it still keeps going higher. If you get a setup at the midline, you got to just take it. So that's how I saw it today. And again, I just think for the most part, you're better off just playing the sideways range. And we just moved up into the higher part here, and you can play that part of it. So, yeah, not a bad trading day. You had to be a little patient early on, and then there's a few in here, and then afternoon got a little slow again. So, I mean, when you do, let's say when we got up into this upper side and it kept turning down up here, but didn't go lower, especially when it starts making all this support higher and higher, that tells you there's more buying is starting to come in, and it may eventually break higher. You still have to get a setup, which you didn't here, so you couldn't trade it. But just be aware that could mean that they're going to work it through here, and we're going to go higher before it's over. I mean, it took them till almost 230 to do it, and then of course by that time they pushed it much higher. And again, that could just be some short covering. They got to run in the stops, short covering, because there's some major support. I'm sorry, resistance here that they broke through, and then here, and even up here they broke through a little bit before it backed up. So they pretty much took this whole news thing back. That's pretty much what this move up was they reversed. They took this news item back, reset it, and now the market's reset again, and it could go straight back down. These emotional news items, they almost always erase them, usually within the same day. Sometimes it takes another trading day. This time it took another trading day. But that's not untypical. Sometimes it takes several days to erase one if it was big enough. But they usually erase it. So anyway, not much more I can say about today. For the most part, it's just a sideways range day with a late short cover and rally, it looks like to me. So we'll see what tomorrow brings. Again, be aware of 7:30 in the morning. Be flat. Don't try to trade from 7 to 7:15 or whatever and think you're going to get out, because you may not. So just don't trade until after 7:30 tomorrow. I think that's the smart move. and then be aware of FOMC on Wednesday. I believe it's Wednesday. I'm pretty sure it is, but that'll pop up. If you use a news guard, it'll be on your news guard. You won't have to guess about it. So anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.